I'm Tim Sustak, Chief Treasury Officer with Vizo Financial, and this is your FOMC update for the December 2025 meeting. At its latest meeting, the FOMC chose to lower the target Fed funds range 25 basis points to a level of 3.5 to 3.75%. They also lowered the rate on reserve balances to a level of 3.65%. The decision was widely expected by the markets. There were 3 dissents on the committee, however, one from Fed Governor Stephen Miron, who favored a 50 basis point reduction, and 2 others from Federal Reserve Bank of Kansas City President Jeffrey Schmidt and Federal Reserve Bank of Chicago President Austin Goolsbee, who both favored no reduction at this meeting. The post-meeting statement had a few changes, with the most significant change giving notification that the committee judges reserves as having declined to ample levels and will purchase short-term Treasury securities as needed to ensure an ample supply of reserves on an ongoing basis. At this meeting, we also received an update of Fed economic projections. The dot plot showed 125 basis point reduction for 2026, consistent with the September projection. The unemployment rate projection remained unchanged at 4.5% for 2025 and 4.4% for 2026. While PCE inflation was reduced from 3% to 2.9% for 2025 and from 2.6% to 2.4% for 2026. The projection for GDP is little changed at 1.7% for 2025, but jumped from 1.8% to 2.3% for 2026. We'll see what additional information Chair Powell gave us at his press conference after the break.
Don't let a bad actor catch your credit union off guard. Through our partners at KnowBe4, we can help ensure your staff are prepared for social engineering attacks before they happen. Vizo Financial has partnered with KnowBe4 to deploy ethical, simulated social engineering tests to gauge security awareness among your staff. By initiating the same tactics that cybercriminals use, you can find out how your team will respond in a real-world situation. Get real-time test results and custom security awareness training plans based on your staff's level of knowledge. Review your results anytime in a convenient online portal. Receive ongoing testing and support from our team of experts. Keep your staff informed and fortify your front lines so you can stay ahead of threats for good. Be proactive, minimize risks, and build a secure future for your financial institution today with Vizo Financial and KnowBe4.
Welcome back. Chair Powell gave his prepared remarks to start the press conference. He said that although federal government data for the past few months has yet to be released, the available private and public sector data suggests the outlook for employment and inflation has not changed much since the October meeting. Economic activity has been expanding at a moderate pace. In the labor market, layoffs and hiring remain low, and inflation remains somewhat elevated in relation to the committee's 2% goal. He said that with a rate cut at the December meeting, monetary policy is within a range of plausible estimates of neutral and leaves the committee well positioned to determine the extent and timing of future rate actions. In the question and answer session, Chair Powell emphasized many times that last point I just mentioned from his prepared remarks. That is, the committee is in a good place to sit and wait to see how the economy evolves. There will be a lot of data to consume between now and the January Fed meeting, given regular releases and data catch-up. But he said the committee chose to move at this meeting rather than wait. He cited reasons for this being that the labor market cooling has continued and maybe a touch more than the committee anticipated, while inflation is a bit lower than expected, and he added that tariffs are driving the inflation overshoot above 2%. Chair Powell indicated that given the committee's mandate remains in tension, there are a range of opinions on the committee about the appropriate monetary policy path moving forward, and the December rate cut was a close call. He also shared that no one on the committee has a rate hike as their base case. All feel that the next move should be down or to hold steady. Chair Powell only has 3 meetings remaining as chair of the FOMC, and he said his goal is to turn over an economy in really good shape with inflation under control and the labor market healthy. Well, the end of 2025 and beginning of 2026 will be busy for the Fed. There will be a significant amount of economic data released, and we expect an announcement in January concerning who will take over as chair of the Fed and the FOMC. Given what we know now, it certainly seems the Fed is on hold at this point where monetary policy is concerned. Clarity fades quickly though, as 2026 will bring a new person running the show who would likely have a significantly different view of things than the current Fed chair. That's the FOMC update for December. Thanks for watching, and I hope the holidays treat you well.